national nonprofit based in California, but it's internationally known, and it's been doing various innovative, cutting edge things as far as microloans to entrepreneurs in developing countries. And so what we have is there's a program in the United States to help businesses in the United States. And so our team, fantastic team we work with, we're going to go to the two, Martha Londigan is our actual, she's a Startup Junkie executive consultant, and she's also the CAM, which is the Capital Access Manager for the fund. Martha has a background from banking to consulting to small business administration to, she's from the area, the long generation of family that is entrepreneurs. Her and her husband run a family-owned business. She is a real deal as when it comes to someone who is helping and being resourceful for, entrepreneurs and business owners. So Martha's a fantastic person that I work with. And I am the program associate. I am originally from Nashville, Tennessee. My background involves in marketing, digital media work, and just overall just strategy on helping businesses get their stories across and what kind of platforms to use. So for me, and a journalist background, I started working with newspapers and working on photography and things like that. And so as we know, media got disrupted with social media and blogging and things like that. I kind of started early from that to say, well, where's these things going? And now what we see in 2021, our entire lives is kind of based off of the digital age. And so with that, that leads us to Kiva. Is our website for the actual hub, kiva/nwa.org. Let's go here. See some of the. I'm going to play a quick video. Let you see it. Get a little bit of info on who we are. Thanks to a very generous Startup Junkie Foundation. Stories we know that challenges. So I'm not sure if it was doing the echo, but basically you can watch this video. It's 2 minutes. It goes really into what I'm going to do in this whole presentation. So I don't want to keep that echo going for you, but I want you to just see that because it's a really good explanation on the work that we're doing. So I showed you the actual website. I showed you this is our website that has all the information when it comes to filling out your application. So here's one good thing to look at. There's two parts of this. There's the borrower and the lender. So depending on who you are and what you're looking at from this, if you're an entrepreneur looking to get a loan, consider yourself borrower. If you're looking to support someone in the area or a local business, and you say, hey, I would like to invest in them or loan them $25 or more, lending, okay? So that's kind of the terminologies I wanted to get across. Fantastic. Let me get this out the way. Perfect. So what is Kiva? Kiva was established in 2005 as the world's first personal micro-lending website. What it does is Kiva enables everyday people, who have businesses. These are your food trucks. These are your farmers. These are candle makers, bakers, whatever it is, who have businesses, but who are lacking as far as getting access into a lot of the traditional funding through banks, right? And so what Kiva did was create a innovative website where now they have 1.9 million lenders worldwide. This is important because as we see the process, when you go live with your actual account, you then in front of these 1.9 million lenders worldwide. So combined, they have lent $1.5 billion in 77 countries. Lenders are very motivated by the impact of things, so they're really touched by the storytelling of what the entrepreneur is doing, more so than a ROI, return on investment. But as we see, the repayments are at 95% plus repayments for many of the entrepreneurs. So, and there's a bar in the Kiva U.S. loans. It's only for small businesses and sole proprietors, so it's not for personal needs. So this is a kind of a separation, I would say, between your GoFundMes and your Indiegogos or Kickstarters. So I'll explain more on that. So with Kiva, a lot of it is, dreams are universal, but opportunities are not. So they are very realistic that, dealing with, racial discrimination, gender discrimination, sexism, so many different things, location, so many different things on why some businesses don't have the same opportunities as others, right? So like I said before, the global impact on 3.9 million borrowers, $1.6 billion in total lent. Kiva does have 110 employees. They are nonprofits, so they're all based there in California, and they've got over 450 volunteers. And I saw here the repayment rate is 96% on it. This was interesting. I first learned about Kiva actually when I was in South Africa and in Africa, Southern Africa, and I heard about it because a lot of small farmers who have less than 2 acres of land needed extra funding for a refrigerator, or they may have needed something for a truck repair, or they wanted more tools or equipment, very basic needs that they may have needed in the range of $1,500 to $2,000. And what we saw was many of these developing nation farmers from Laos or Vietnam or Africa were women, and they were at a higher rate of paying the money back because they knew the importance of it. And so that's a very interesting, because a lot of this comes from a scientist named Muhammad Yunus, who is known as the banker of the poor, and this is where the concept that this came from, that he created. So here in the U.S., lenders are 280,000 lenders. There's 6,400 U.S. borrowers, and there's been crowdfunded in the amount of $40 million. So what is the problem that they're identifying? So part of what I was saying earlier was traditional lenders, they prefer to make large loans. One thing that Martha explained to me in this kind of way is that the same amount of time to do a $100,000 loan and paperwork is the same amount to do a $1,000 loan. And so bankers tend to rather do a higher loan than they would a smaller loan. So with these kind of large loans, they have to have established credit, collaterals, or kind of audited business financial paperwork to prove that they're able to pay this off. What are the downsides from that, though, is that many borrowers don't have established credit. They do not have a collateral. We know that many businesses, especially within the Black community, I have almost, I believe, 40% is friends and family rounds of the early funders of businesses. And in the Latinx community, it's around the same 35 to 40%. And many of these, it's actually higher, because it's actually higher than 40%, I'm sorry, because that is the closest people to lend many minority business owners. And so with this, the interest rates can be as high as APR rates can be as high as 15% to 700%. So it's not as a very attractive deal for some entrepreneurs. So the solution to this, Kiva does not require a high credit score. They do not worry about that. No collateral pledges. And they do require business paperwork, but there's not an audit of your paperwork to see, judging it. And normally the loans are ranging from $1,000 to $10,000. What we have right now with the current fund that we're working on was up to $1,000 to $15,000. But you have to check with us to see how long that is going. And that was for the COVID relief program. We had extended it. Now, what was good about that was when you initially got the funding, you didn't have to repay it until the first 3 months to start. So that, again, was a plus to give you a 3-month start to actually do some of the things that you can do to make the profit for it. There's 0% interest rates, unheard of, except for Kiva. And the payment terms are from 12 months to 36 months. What is also very good about what Kiva does is it's a first step to the capital ladder. So by being a borrower and repaying your loan, you then can take that to the bank or small business SBA and say, hey, I've had a $5,000, $10,000 loan and I repaid it over this amount of time. This is what I'm able to do with this kind of, loans or have access funding, and seek other opportunities with traditional community banks or equipment leasing companies and so much. So it's a really good opportunity to show your paperwork in these early stages if you're not able to get them from other entities. Why our hub is very important. The Kiva NWA hub is very crucial because we have a trustee who is Martha that I spoke about earlier. And the Startup Junkie Foundation is the NWA trustee, and Martha runs that as the trustee person. This is very, very, very important because when you're doing the application for the Kiva loan, they want to have a trustee who endorses you. They say they've seen your business, they've talked to you, they went down to the application to make sure that you've understood some of the things, the criteria, and they trustee you. That trustee makes it a really good opportunity to get closer to what you're asking for. So if you're saying $10,000, a trustee will say, definitely believe that they're worthy for this $10,000 loan. And so that kind of puts you in the higher rank to receive that. So in some cases, endorsements have helped borrowers get approved for larger loans and lower PFP amounts. So this was very good to sit down with our trustee over that. The loan program, this is what we kind of call the circle of life right here. And what this is the entire community and the benefits of the Kiva loan process, of why this is beneficial. So if you look at the arrow I'm showing to the left, cities, banks, and communities all work together to support Kiva borrowers. Disadvantaged persons or the borrowers who are kind of struggling with getting funding come to Kiva with this loan because it's in hopes to improve their business. And then you have over here are people in the area who are supporters. These are also friends, families. These may be people who just want to see your business thrive, right? And they are the lenders. So what Kiva does is provide this platform of merging the community, your chamber of commerces, your business associations, and then you have your entrepreneurs, and then you have your lenders, and we bring them all together by using this platform to support each other and to get the loans right into the hands of some of the entrepreneurs. So it's a very important cycle here. So what are the eligibilities to get the loan? How do you qualify? So you must be 18 or over. You must be using a loan for specific business needs on purposes, so it's not for personal uses. Your business must be based in the United States, not in Rhode Island or Nevada. There's some states that is not. You cannot currently be in a foreclosure or bankruptcy. You can have it in the past or previous, that's no problem, but none currently at the moment. Must be willing to demonstrate some social community. So what is your social media presence? What is your online presence? What is your website? What are the things that you're already kind of campaigning and doing right now? So when you go live with this, that you're able to ask 10 people, 100 people, or 1,000 of your followers to join into your campaign. So we look at all of those things in the process of this application. More eligibilities. So we ask that you work with the CAM, the Access Manager, Martha, to discuss how you can repay the loan. She's going to do a debt to income ratio to see how you're, faring out in the qualifications. No criminal convictions, no violent crimes, crimes against children, or any frauds is not acceptable. And you must set up a PayPal account. The reason why is link it to your bank account. And the reason why is because PayPal is providing their platform as a free fee charge. So in order to capture all of these payments and loans, someone usually wants to get paid from that. Well, PayPal, who is close to Kiva's office, has agreed to do their without it. So setting up this PayPal is where the money will go to and where you can disperse it to people who lend to you. Must have, cell phone, email, just basic paperwork account to show that your business is in operation. Once we go with that, then each borrower is loaned $25. Every time someone loans it, the Walton Family Foundation matches it at a dollar-for-dollar loan. So you'll see how this works out in a few minutes. So business verification, a lot of the LLC, corporations, government registration documents, city, state documents are all good. We highly recommend a proof of product if it exists, the EIN number, tax ID number, all of these things that you would do, just basic paperwork. We just think, gotta have copies of. How you won't get approved by Kiva. This is the no-no list. No CBD or hemp business, nothing illegal, no lending institution, so you can't get this money and then lend to someone else, no gun shops, bullet makers, drone business, direct seller business, no political affiliated business, no contracts for larger corporations such as Lyft, Uber, or Airbnb, no tobacco-based, and you can't use this to purchase stock or trade options or cryptocurrency. So strictly for business is what this loan is for. Borrower process. I don't want to make this too boring, but what it is basically you can submit your application once you meet with us, and we've gone over the criteria. When you submit it and it's been endorsed by Kiva, they're going to then say, cool, you have 15 days, and you've been approved for, let's say, $10,000. They're going to say, can you find 10 people in 15 days to give you $25 each? And I loan you $25. Once you reach the 10 people, it's a private link, so it's not public yet. It's a private link. So think of this as your collateral. So as we said, then they're asking for collateral. So think of this as your collateral. So Kiva says, can you get 10 people privately to put $25 each? When they do that, you're then going live to get access to the $10,000, all right? So at that stage, each amount that comes in, the Walton family is going to do a dollar-for-dollar match. So think of it this way: if you can get to 5,000, you've already got another 5,000 waiting for you in your campaign, if that makes sense. So if you got a campaign for 10, you need 10 people, let's say, or 5. They say 5 or 10 people. Let's in this case say 10 to put $25 each. Then you go live, and then it's live. You got the campaign. So let's look at some examples of this. And we'll come back. Here we go. This is a good example. So this is the process right here in the funding. So you've got your storytelling. I'm going to come back to that. So we've already created your story. I've come in and taken a picture of your local in the Northwest area. I will come in and do a picture with you in front of your business to look the part that you want to look. And so then you're in this private stage right here. This is a good example. You see it. They have to get 20 people. So he's 18 out of 20. Once he has got it, he then initially goes live into a public fundraising period. And this is where our dollar-for-dollar match kicks in. And now he's fully funded. We have seen entrepreneurs go quickly from 6 hours to 14 days, 12 days, maybe. But our average is around a week, hours sometimes, and so depending on the amount. And then this is what it looks like when you're paying it back. So the entrepreneur will have, in this case, she has 153 lenders. So of course you're not sending out 153 payments every month. What you do is make one payment into the PayPal, and then PayPal disperses it into the 153 lenders, if that makes sense. All right. Let me go back. So the difference, and any questions you can ask in, but now what are the difference between the other crowdfunders? So with Kiva, there is no fee. So some of them have usually 4 to 10% fees. I've used an Indiegogo. I've done a campaign myself on film, and it worked, but there is a fee attached because they are administrating it. The success rate sometimes is 20% in a lot of these, but with Kiva, the success rate is 90%. That means we definitely can identify people who want to see your business grow and get that to you, and you're definitely going to find entrepreneurs who want to repay their money back to people who loan them business. So that's a 90% success rate. On other crowdfunding, you have no support. It's basically you put your campaign out there, and whatever you can do, you can do it. With us, you actually have a access manager to go through the whole process, edit your presentations, your profiles, and things like that. Loan sizes. So with the COVID-19 relief, you can get up to $15,000. It may require more private lenders, but that's you can get up to that right now. But it's up to $1,000 to $15,000. As you can see in here, if you was approved for $3,000, you would need 5 people in your private lending. As it goes more, it asks for more private lending from people. Boom. So, yeah, the criteria is collateral, no collateral, low to no business revenue is fine. Minimum credit score is fine. Citizenship, not necessarily required, but it's okay. We've had some entrepreneurs who are in the process of working on their citizenship, but have a business, and they've used their tax ID, and it worked tremendously. This is the process, and again, I did not want to make this long going. We're going to email this whole slides to everyone. We're going to have the video for anyone who wants to watch it. If you have questions, please drop it and ask me. Let me go over something. Here's what I'm going to do. Let's go over some real cases. Show you some of the entrepreneurs that we have funded. We have funded 37 in the last year. These are some of the local ones. And again, we're from photographers, food trucks, bakery, supplements. Then one entrepreneur, he is a Latino based business supplements. So here's the 37. Let's look at this. We're very proud of this one. Judy is the first Marshall Lee's food truck in Arkansas. The first one. She has, the Marshall Lee's community is real big out here, big support. Soon as she went live, she actually got a loan for $7,500. Soon as she went live, they were ready to support her, and half of that. So she got 59 lenders. Okay, let's go through. So she was asking for $7,500. She wanted to open up the first Marshall Lee's food truck in Arkansas. She already had a restaurant or was known as a really good chef, and the work that she was doing. She probably went faster. This is another note too. She probably went faster and we've just seen this, as women entrepreneurs just go super fast with Kiva. Men is usually taking a little bit longer, 7, maybe 10 days, the same. But women entrepreneurs go super fast. And yeah, so this is, and it shows right here, here's all the contributors, and these are all the people that contributed to her. There's teams. This is another good thing. So there's actually teams that actually go and say, hey, that actually sometimes compete with each other. It would be an atheist group, or it would be a Christian group, or it would be a Muslim group, but they actually want to support. And then, you know, anybody is good because they're coming with a worthy cause. So these are all of the lenders that lend to her. Kind of tells her story. Let's go look at another one. And then I'm going to see if there's any questions. Let's see. Boom. This is a food truck. Coretta, she had a therapy business for counseling, mental health. She wanted to get a license for pet therapy. So she got approved for an $8,000 loan. Hers went in a few days, instantly went into her account, and then probably in another 2-3 months, she's going to start making her repayments on it. Adrienne, she has a business where she sews in the hair extensions, wigs, and things like that. So she has a business where she fixes them. Kelvin, he has a barbecue in Fayetteville. Kiva had a driving academy. She got a loan for $15,000. So this was Lamar. Lamar had a auto detailing. He's been very happy. What he actually used the money for was, I think, marketing or advertising or a website. So, you know, what you want to do with it is up to you, but you want to kind of use this loan to kind of get you something that you've been, you know, putting aside maybe, or any extra equipment that you've been wanting to get. This is how I perceive the Kiva loan. And I'll say this, coming from where in the VC world and the tech world and the startup world, we tend to look at big companies and big thinking and a lot of, you know, innovative companies that's going to do the next big thing, you know, million-dollar companies. But, you know, a large part of America's employment is small businesses. It's your mom and pops. You know, it's your detailing mission. It's the companies we just listed. So this is a big reason why I find this as something that's very helpful and realistic, and I enjoy the work that I do. And I thank everybody for tapping in and joining in this webinar. If you have any questions, please feel free. Follow our Facebook. We'll take pre-schedule, any questions or anything that you have. This is our website, and that is it. Let me check if there's any questions. Okay. No questions. I assume everybody that made sense. Hope I answered some of the questions for you. Thanks a lot. And please share this and let anyone know if they have questions, or if there's an entrepreneur that you know in the area that would be interested. All right. Thank you for everyone for attending.